Hello there, and welcome to the April edition of Mondays with Matthew. I'm Windermere Real Estate's Chief Economist, Matthew Gardner. Well, there were a lot of rich housing-related data sets released this month, so let's get straight to it. First up, I want to look at mortgage applications. Now, you may remember last month we discussed what was going on with mortgage rates as they had started to trend higher beginning in the new year. Well, as rates rose, you can clearly see here that mortgage applications slowed before picking back up at the end of February, which is actually rather interesting as rates were still rising at that time. And for those of you who find it curious that applications picked up even as rates were increasing, well, it was partly because buyers started to believe that rates would not be headed back down, and they wanted to get locked in for fear that they would continue to trend higher. Now, this pattern did reverse at the end of March. Why? Well, rising rates started to take a toll on would-be buyers, and affordability issues started to come more into play. But as mortgage rates pulled back in April, well, applications picked up again, albeit very modestly. But when we take a look at the data on a year-over-year basis, well, wow. Applications were up by over 58%. But let's not forget what happened in March of last year. Honestly, who can forget? And it's therefore really not surprising to see this kind of spike. But I would caution all of you that almost any data set that compares current numbers to those seen a year ago, particularly as we move forward through the summer, well, they are likely to paint far too rosy a picture, and one that is, quite frankly, removed from reality. Something to be aware of. Next up, we got several data sets regarding the new home market in March, and we'll start off with permits and starts. Following the pullback in permit applications that was seen in February, builders were more optimistic in March, with single-family permits up by 4.6% on the month, and up by 35.6% when compared to a year ago. But don't forget what we just said about year-over-year data. Looking at housing starts, well, they pulled back in January and February, but also saw solid 15% monthly increases in March. Interestingly, there was a massive spike in starts in the Midwest, where they were up by 109% month over month. I'm afraid here in the West, well, they were down by over 12%. I would also let you know that the number of homes under construction, well, that rose by 1.6% versus February, and that's particularly pleasing given that construction costs remain very elevated. And it hasn't just been material costs that have been hitting home builders very hard. They've also seen significant pressures when it comes to labour costs. And here's why. This chart shows how many people are employed in the construction of single-family homes. And on face value, it looks pretty good, with consistent growth seen since 2012, of course, ignoring the impact of the pandemic, but still. And, well, look at the longer timeline. It doesn't paint as good a picture, does it? At its peak in 2006, there were almost 650,000 people employed building homes. But the number today, well, it's just 60% of that. Now, of course, there are fewer homes being started today than there were back in those halcyon days, but starts today, well, they're not 40% lower. So the job market remains tight. In fact, I took a look and there are over 260,000 job openings in the construction sector. Now, of course, not all of them are for people building single-family homes, but we do know that builders' cost of labour is rising, which, in concert with higher land and material costs, that continues to impact builders' ability to bring homes to market that are relatively affordable. As the increase in costs, well, builders transfer that directly into the price that a home must sell for. And that brings me to data on new home listings, sales, and prices in March. Even with new housing permits and starts rising significantly, the seasonally adjusted estimate of new houses for sale at the end of March was just 307,000. That represents a supply of 3.6 months at the current sales rate. The number of homes for sale down by 7% from a year ago, but I do expect that the increase in permits and starts, I think it bodes very well for this arena, and I do expect we'll see more listings come online over time. But if you look to the chart on the right, you'll notice that the number of homes for sale that have yet to be started, well, that continues to rise. This is because builders want some kind of certainty that the home will be sold, and it's therefore easier to sell before you actually build it. And when we look at sales, well, they rose by 20.7% in March to an annual rate of over 1 million units. And clearly rebounded from the previous month when we saw a massive drop. Why? Well, you may remember the severe winter storms that wreaked havoc across much of the country. Interestingly, you'll also see that as many homes sold that hadn't started as were under construction. Now clearly, demand is robust to the degree that buyers are willing to commit to buying a home that hasn't yet been built. The median new home sale price came in at $330,800. That's down by 4.4% on the month, but 0.8% higher than a year ago. Okay, now we've covered the new home market, let's take a look at how the resale market fared in March. The number of homes for sale remains at almost historically low levels, with marginally more than 1 million units on the market. Now, there may be some of you out there who say that this is inaccurate, as NAR is reporting 1.07 million homes for sale, and you'd be absolutely correct. The difference is that I adjust the data to account for seasonality, so there will always be a very slight difference between those two figures. Anyway, with such limited choice across the country, it wasn't at all surprising to see sales pulling back, with the total number of closings running at an annual rate of 6 million units. Now that's down by 3.7% month over month and down by 12.3% when compared to March of 2020. Am I worried about this? No, I'm not. Why? Well, as I just mentioned, just look at the inventory numbers. With little choice, it's not at all surprising to see sales pulling back. And I would add that the market still hit 6 million transactions. And that was in the face of the increase in mortgage rates that we've seen over the last couple of months. So to tell you the truth, I was actually a little surprised to see that the number held above that 6 million level. But even as sales pulled back a little, prices, they didn't. And more records were broken, with the median sale price hitting another all-time high and year-over-year price growth of above 17%. Well, that was another record shattered. And if you need further proof that there is little to be concerned about when it comes to total sales pulling back, well, you only need to look at these two charts. Low supply, but still very robust demand, has the months of supply at levels that indicate a highly unbalanced market. You see, nationally, I like to see somewhere between 4 and 6 months of supply, not 2.1. But look to the right. For every offer accepted in March, there were 3.8 additional offers. I'd also tell you that the average length of time it took to sell a home in March, just 18 days, down 1 day from February, but down by 11 days when compared to a year ago. Now surely, if demand was waning, wouldn't the number of offers be going down and the days on market going up? Well, gives you something to think about. And when we separate out the single family market, you can see that listings notched very slightly higher, up by 1.2%. The level is still close to an all-time low, with listing activity down by over 31% year over year. As far as sales were concerned, well, they also pulled back a little, down by 1.3% versus February, but were also 14% higher year over year. And as we discussed earlier, even with lower sales activity, sale prices are still rising at very rapid paces, now 18% higher than we saw a year ago, and also a remarkable 6.2% higher than we saw in February. And also the median price broke above $330,000 for the first time ever. Now moving on to the condominium market, where we saw listings rise as the pandemic took hold, and back then there were concerns that we were at the start of a systemic increase in listings as people were fleeing the cities over fears of COVID-19, as well as their newfound ability to work remotely. However, that increase soon wore off. Now, even if it did rise by 9% in March when compared to February, there were still 5.1% fewer listings than we saw a year ago. But on the sales front, and with listings rising, we still saw demand for those homes, with sales up by 5% versus February and 36.4% higher than we saw in March of 2020. In a similar fashion to single-family prices, sale prices for condominium units saw a spike in March and were up by 4.9% versus February and up by almost 10% when compared to a year ago. Although you will see that annual sales price growth did turn negative last May due to COVID, it's actually rather rare to see this. Now, we did see a tiny drop back in 2018, but you will likely remember that mortgage rates were rising then and knocking on the door of 5%. Anyway, since last May, sale prices have picked back up very nicely, and worries over any significant drop in condo values, they appear to be overblown, at least for right now. As far as the ownership market's concerned, I'm far less worried that mortgage rates have been ticking higher than I am that there are just not enough homes for sale to meet the massive amount of demand that there is out there. We had seen some growth in the new construction arena, and that took just a tiny bit of heat off the resale market, but demand continues to exceed supply. That's pushing prices higher, and affordability issues, well, they're already starting to appear in several markets across the country. At some point, we will see home price growth slow, but I think that it'll be far more to do with affordability limitations than it will rising mortgage rates. So there you have it, my thoughts on the housing market in March. As always, if you've got any questions or comments about these numbers, well, feel free to reach out. I would love to hear from you. In the meantime, thank you for watching. Stay safe out there, and I look forward to visiting with you all again next month. Bye now.